Giovanni,
Good morning.
good morning. Money or debt? How's it
Good
going?
morning.
We are waiting on a few people. Here we go. We got some more. Oh, no, this is still Giovanni. Okay, we should have plan C. We should have some new arrivals, new converts, or new apostles, I would say, to the Bitcoin power law thing. I just want to start it off by saying, there was this book uh, about Enron called "The Smartest Guys in the Room," and it didn't work out well for Enron. But I do kind of feel like we got kind of some of the smartest math physics guys in the room right now, and there's a few more brains coming into the room. So I really think that with the people here, we may not understand Fed policy and you know who's going to win the election and that we have no idea. But as far as like people who can understand um, the numbers of the power law, and I think we have more brain power in this room than I think we've really seen ever in Bitcoin history, and kind of in a podcast. So I just want to thank you all for coming. And the format of this experiment, right, which is basically let's see if we can get all these physics and math and quant guys in one place. Um, is let's just sort of see, first of all, where are we with the power law? What is the power law telling us about where we are now with Bitcoin? And then also, maybe there's some new stuff that we're learning. People are coming up with new stuff. I mean, I started doing these podcasts with Giovanni about 4 or 5 months ago, and there's all kinds of new stuff that's been surfaced, by Giovanni, by other people, and so I'd love to, just let the crew kind of investigate. And I'm going to start with Giovanni. Thanks for coming by, and let's get a little presentation from Giovanni as to kind of whatever you want to talk about, Giovanni. I think you're
Sure.
going to talk about liquidity, if I'm not
Yeah,
correct.
right. Exactly. Um, so where are we with the general power law? So I'm just showing you this graph from one of the indicators that I developed. The red line that you see in the middle is the power law, um, and the line that you see below is what we call the support. That is a line. You can derive it in many different ways, but one possible way is to calculate about 60% deviation from the general trend. Many of us think that is the real power law, that is basically what really generates the power law. There are many different reasons to think that. Probably has to do something with the cost of production of Bitcoin, something that needs to be explored more. But others maybe can explain that better in their presentations. But you can see how that line below touches the bottom, right? One of the bottoms. And then the price moved. Um, it was about $17,000. We could have identified it at that time if we were having these shows at that time. We could have told people, "Hey, this looks like a bottom. Please buy a lot of Bitcoin." And but hopefully we can do this in the future. But anyway, so the price moved away from that, and I think there was a lot of movement recently in the last several months, mostly because of excitement due to the ETFs. And the excitement due to the ETF is they are exciting, they are important development for Bitcoin. But the price that we obtain through that FOMO, let's say, or excitement, is not justified. It's not justified for many reasons, because usually when we come too close to the power law at this particular time of a cycle, it's not a super good sign, because it means that the price is overvalued. Usually we kind of, if you look at what happened in the previous cycle, we are closer to the support line. Things starts to pick up and they go towards the usual bubble what we observe over the years. when we come close, to, for example, right now, it's going to be around November of this year. It takes about 2 years. It takes 2 years to go from the bottom to when actually we see the first signs of the bull market. So notice it could be a coincidence, but it's kind of interesting that the price met the power law, and then the power law became almost like a support line. A resistance line. So it becomes a resistance. So it's almost like the price say, I'm not ready to cross that line. I'm going to over around it. In fact, there was even a correction recently of the price, right? So it looks like I didn't cross that red line. It stayed there, kind of stable, maybe going a little bit down. Now, what is this indicator? It gives us a little bit more information. So many people pointed out that it seems to be some kind of a relationship between liquidity, global liquidity, and it's an arbitrary measure. We can define it in many different ways. But in this case, I took many parameters that are associated with global liquidity, like the different M2s from different countries, the US, Japan, China, the money in the reserves, the Fed. Took a lot of parameters. People, we can put a link if you want in the chat of an article that I wrote where I explain in details what I did. But basically, I didn't want simply to plot a global liquidity by itself because it doesn't tell us anything. My interest is always to look for relationships, right? How this quantity relates to another quantity. In our case, mostly price, because it's really what we care most of the time when we talk about Bitcoin. And so I tried to see if there was any particular relationship between this quantity, the global liquidity, and the price itself. And it looks, there is a relationship. In my article, you can see, I don't have it here as a slide, but it's a complicated relationship. I was hoping for something simple, maybe a power law, because if there is a beautiful power law, then it's easier to make a model out of it, or maybe an exponential or something simple. It's a complicated relationship. It looks like a very non-linear relationship. Many times, for example, global liquidities, if you look at the relationship with the SP 500, and Matthew actually is an expert in this kind of things, he can verify, is very much linear. It's like a one-to-one relationship between these two things. With the Bitcoin, there is some kind of a multiplier. Like it looks like liquidity comes in and it gets multiplied. The price gets much higher than the liquidity will say otherwise. But it's a very nice, clean relationship. It's just more complicated than a power law, an exponential, some simple function. So I use what is called a polynomial expansion, where you add more and more term to your model until you get something that kind of makes sense, something that kind of predicts the general path without making it too complicated. It's an arbitrary thing, unfortunately, because you have to decide how many terms you're adding. But there are ways of determining when you should stop in your expansion. So it's a decent model, and this is what the purple line indicates. It's telling us what is the fair value price for Bitcoin given the existence liquidity. And so in general, if you look at the past, I can show you a more dynamic picture. This is a still, but if you go to all the previous times between the bottom and the next bull run, we always see that the purple line is above the white line. The white line is the normal price, that is the price of Bitcoin on a daily basis, and the purple line is this projected price, this this fair value price based on liquidity. And so it turns out that just before the bull, the purple line is above the white line. It means in that case, and you see I shaded in green, that the liquidity, this is my interpretation, the liquidity is not really a direct cause of a bull run, but is a prerequisite. You need to have a liquidity to support the bull run. That kind of makes sense, right? And it's something that it has happened over and over again. We can scroll on the chart if we can see a dynamic form, and you will see that this pattern has been repeated over and over again. So what is how does this compares with what we have right now? What we have right now, you can see it's a red area, and that means that because I think this is my interpretation, because of the ETF, the price was pushed up a little bit too much. It is not supported by fundamentals like having enough liquidity, and we see this a red area, and this is why we are not ready yet for the bull market. What we would like to see is the purple line catching up with the white line, and I kind of made an extrapolation of that. You see right now, little by little, the purple line is climbing up, and so I don't know if you will continue in that path, but
can you give us a date, Giovanni, for the crossing?
Yeah, so that date where they cross, so imagine the price stays more or less the same. It could go down and meet that purple line earlier, but at the moment, if you're assuming that the price stays the same, the purple line continues in this direction. We don't have any basis, but it's just, a guess. Then we are going to meet around November 5th. So, and that will not necessarily
happens to be the election. Happens to be the election.
It's interesting. It doesn't have to be necessarily the moment where the bull run starts, but at least it creates the right condition. And maybe, we will need another week or maybe 2 weeks of this green area. And then, the indicator will flash green. It will tell us we have the right conditions. And, it will be a good sign that maybe we are ready for the bull market. So it's kind of a cool indicator. It's all based, like almost everything we do, on the premise that everything is going to repeat like before, because it's the only, logical and scientific base that on which we can do these predictions. We can say if everything happens like before, and it seems, to be very predictable, very consistent, then this is what to expect. So
Giovanni, this is. Can you mind if this is really? I'm really interested in this work on your side, the liquidity stuff. And if you mind if I ask you one question,
sure,
on the specific liquidity signals, whether more direct or the more indirect sort of liquidity metrics. Could you give us a sense of, because it sounds like you kind of have like a customized sort of metric to put this together. What sorts of specific metrics do you tend to weight more? Or where do you tend to see more signal in order to make this work better?
Yeah, that is a very good question. And actually, in fact, one thing I can do, maybe, then we can switch to other people. I have other things to talk about, but I can do it at the end. But let me share the live version of the indicator, because in that way you can see how it works in general, if I can find it. But it's a very good question that I was thinking myself the other day about, that probably we want to give different weights. I don't know if this is what you were thinking, right? We want to give different weights, and now we should see if Fred can
exactly, because at least on my side, I haven't gone through all of them myself yet, so I'm curious what you've kind of
exactly. So there are ways. That is the next improvement. There are mathematical ways, like you can do what is called a multivariate model, where you have many different contributors to some kind of a pattern, and then you say, okay, what are the single contributions of these parameters? Because right now I'm using like 10, 12 different metrics, and then you can say, okay, this one has bigger weight and this a little bit weight. It's obvious that, for example, maybe Chinese yen doesn't have a big impact, for whatever reason, and US M2 has a bigger impact. So that will be the next thing. Right now, everything has a weight, maybe kind of proportional to the amount of money available, but I'm going to improve the model in that way. So I love your question. That is what I'm going to do next.
Thanks, Gio.
Cool. But if we want to look at the live version, this is the live version. Let me show you what I was talking about in terms of the patterns, right? And see if what I say makes sense, because it's a matter of interpretation at this point. Everybody can have an interpretation. But look what happened here, right? So, for example, this is the previous cycle. This is COVID. We had a similar situation where I don't know what happened during this time. This was May of 19. There was some kind of probably excitement event where, in that case, we went above the power law. The price said, I don't like it here at this particular time of the cycle, and it corrected itself, right? And then COVID happened, and there was even a bigger correction. We never cross this yellow line, right? It's almost like a barrier we never cross. And then that correction actually brought the liquidity that was necessary. Plus, there were a lot of stimuli, other things happened. There was enough liquidity to create the right condition for the bull market. And then we had the bull market, the price started to go up. That is the other thing that, if we have time, I would like to talk about. That we have an exponential growth. It's not perfect, but that is the other component that we didn't have before. That during the bubbles, we leave a power law growth and we became exponential up, exponential down. So we kind of cancel each other. So we went exponential, and notice what happened when the price very high. There is this decoupling between the price, the real price, and this model based on liquidity. But it's kind of a definition of a bubble, right? When you don't have the right condition, when we don't have the fundamental to support the price, it's all FOMO. The price does its own thing. It doesn't care. But is unsustainable, right? It's almost like an alert that is telling us we are in real bubble territory, and probably the price is going to crash. And you can see what happens when we crash. There is basically another correction. We go even lower than we should be, and then this repeats itself. And you can see this happen basically every single time, right? We needed to have the right condition. We need to have the right liquidity. So I would not say that is a cause. The liquidity is a cause for the bubble. It's a precondition that is necessary for the bubbles to happen. But that logically makes complete sense. So the only time this didn't happen, that is very interesting, was during the first bubble, the one that happened before halving. So this one is the first one when we went all the way to about $30, which was crazy. And my understanding of this is, the institutions were not involved yet. It was mostly retail. The market cap was not big, so you didn't need all that liquidity to push the price up. But again, it's like the oddball, but it makes sense overall in terms of the picture that we described. So it's kind of, it seems a very coherent picture and an indicator that seems to be very useful. So I'm kind of happy with this indicator. I think it's a useful thing to look at. It's going to give us.
Gio, can we get back to this in the interim, just because we want to keep the thing moving? Let's bring in Sina a little bit to hear his commentary a little bit. So Sina, maybe you could take over. We'll get back to liquidity, but I just want to keep it moving a little bit.
Absolutely.
Okay, let's go. Sina, you're up.
All right, can you guys hear me?
Yeah.
Okay. So, well, thanks a lot for organizing this, Fred, and it's exciting to be in that esteemed company. So I want to share some slides. Let's see if I can figure that out. Share window. All right, is it working?
It's working.
Okay. So I'm going to make it full screen. Hopefully it doesn't stop working. You still all good?
All good.
Awesome. Okay. So I just want to give a quick update on my volatility adjusted power law index, and then I'll talk more in depth about the quantile regression. So where we are with the price right now is the market is cool. And this index is basically showing how the price fluctuates around 50. 50 means the exact average prediction of the power law model. But whenever we are higher than this, we are hot. Possible that we will come back to the line, and then whenever we are below it, we are undervalued. So right now the current price of 59 is cool. The index is 39, which is below 50 by quite a bit, and the power law price is 74. So if we were following that trend line, we should be at 74. We are kind of spending quite a bit of time below it, which is a great opportunity. And if we zoom in, we can compare those numbers. This is where the average prediction of the model goes, and this is where we are. So this makes me very happy. I still have, I need some more time. Okay, so that's about the VPLI index. Next, I want to move on to something that I've been playing with more recently, which is quantile regression. You know, other people like Plan C has also done some work on this. But the value of quantile regression is it allows us to model the changing distribution of a variable. So let's see if I can, no, I don't have that chart, but one of the problems we have with a power law regression is, you know, it does a perfect job in modeling the mean, but the variance changes over time. So the distribution changes over time because the market structure changes. Quantile regression allows us to also capture that distribution change by modeling different quantiles of that distribution. So you can have different regression lines that go through the first percentile up until 99th percentile, or even more granular than that. And that's where you have lines that capture the lowest part and the highest part and the median part and whatever else you want from the distribution. So it doesn't only give you, you know, an average or a median prediction, it also captures the whole range. Now, in this case, I've just drawn a bunch of lines from quantile 1% to quantile 99. Percentile 1 to percentile 99. And then at the moment, those values range from 33 to 194,000. So, and you can see they pretty, you know, they capture the range of the Bitcoin price movement pretty well. So this is 99th. This is the first percentile, which, you know, typically captures the bottoms very well. And then if I zoom in a little bit and extend this into the future, for the end of 2025, end of next year, this is how those lines will behave. So you can see the first percentile will be at is predicted to be at 55. 99.
So one second. I think you need to get to move the screen, Sina, to a different one. Go to number 4. You're on 3 on the main screen.
What do you mean? I'm changing this.
Oh yeah, there you go. Now you're good. You're good now. Okay. Yeah.
Is it better now?
Yes.
Okay. So somehow I was changing the slides, but it wasn't showing on
yeah. Okay. This is good. Yeah.
Okay. So if we extend our prediction, our quantile predictions into the future, I'm not doing a lot just to the end of 2025, and you can see the 99th percentile is at 288. First percentile, which is I expect this to be the absolute possible lowest value, is 55. And we are now, right now, the price is kind of at like 40th percentile. So, you know, 60% of Bitcoin's time, we've been higher than this. And this model, you know, if I clean up this graph a little bit better later, this model, I think, is a very good tool to give us a range of possible values for any time in future.
This is a fantastic chart. I'm going to post this chart separately, but I think this chart is just kind of in one chart, kind of gives you a pretty good estimation for where we sort of see things in the next year, right? And if I had to summarize, it says, well, why don't you summarize? Give us the TLDR on this chart for up till through 2025. How does it look?
Yeah, so this model predicts a median value of 108,000, a minimum value of 55, and a maximum of 288. Shortest version of that.
and I would sort of say pretty low likelihood of getting above 200K, right? Pretty low for in next year. That's what it's sort of saying. It's like, don't count your chickens. If you were thinking about buying the private jet with your 2 Bitcoin, probably not a good idea. You probably are not going to get there this year.
Exactly. So like 1%, 1% of the time is going to be spent there, but I don't think in the early part of 2025, probably not. All good. So that's Quantile regression. We will be publishing more on this. These are literally, just created these things before the session.
That's
So
great.
we'll keep publishing more and explaining the theoretical foundation behind the Quantile regression. One of the good things about this is, if I can stop sharing, one of the good things about this is it's not like TA where you just connect the tops or bottoms. It's using all of the data, and it's running a model that minimizes the errors. So it captures, it takes advantage of all the information we have.
Well, thanks a lot, Sina. Let's move on to Matthew. Maybe Matthew, introduce yourself to the Bitcoin crew here, and tell us what you're thinking about the world right now, mathematically.
Yeah, hey guys, good to be on. Matthew Brzezinskis, One Base Money on Twitter, Crypto Voices podcast on YouTube as well. Been doing this for a while, so yeah. Giovanni was on my podcast recently. We had a good 3-hour conversation, and yeah, good to be here chatting with you guys on this. So I got one chart here for you. We share, and I think you can see it. If you want to just confirm you can see it, because I'm not looking at. You guys can see this, right?
All good.
All right. So we got just the price here on log scale, and one way I always like to sort of describe Bitcoin over the long term for people is if you look at compound growth. Now, obviously, as we know, the power curve is not exponential. It's not exponential growth is power growth. So it's a little bit different, but you can still describe it as far as compound growth. So I've done this on my website and different things for a while, but I think it's just fun to look at. I haven't looked at this in a while. So if you look at any point in time, take it to today, we can actually, rather than say I got a 500,000% return or whatever, what was at $59,500 today, what was your compound growth at that point? And that's here. Okay, so basically it's an inverse type of a thing. You can see if you bought here, at $20, it's actually went up to $30. Where was that? Right there around June 9th, 2011. Held that till today, 77% compounded. All right, so that's obviously a huge return, much larger than the 0% short bonds, and not too much better percentage long bonds, stocks, whatever, 7%, 9% with dividends. Obviously, this is huge. Then as we go forward, you can see that it just mirrors the price. Obviously, a higher price, a lower compound growth, but this would change. This is all based on today's price. Okay. And as we know, this is kind of the opposite of an option, right? As we lose that theta, as we get closer to today, options will sort of lose the volatility. Here, you increase the volatility because, it's less than a year, right? And interestingly, people say you can't get huge returns on Bitcoin. If you bought, this was around the, where we go, actually, it's late 2022, wasn't it? If you bought at 16,000, I remember Peter Zion was on Joe Rogan saying that Bitcoin was $17,000 overvalued when it was 16,000. If you bought then, held till today, all right, that's 117% compounded growth, so year-on-year growth. So it's obviously huge, and it's if you were Roger Ver buying at $1 back in early 2011, it's a comparable number. Now, obviously, if you compound over 13, 14 years, it's a lot more than now, but you can still get plus 100% compound growth depending on your timing. But regardless, as we all know, we're more long-term, not traders here. At least I'm not. So what you can do to smooth this out is we can run the same compound growth exercise on not actually the price today, but on the power curve. So it's just basically the opposite. So here's our power trend. We got a lot of things on the chart now, right? But the opposite of the power trend, I'm gonna take the power trend off, is our little compound annual growth modeled on the power trend. So again, let's just go back really quick. I'll finish up here if you have any questions on it. But if you go back to June 2011, where Bitcoin had that first pump up to $30 right there, the actual compound growth was 77% if you held till today. But since the trend, as we know, is over 70K at the moment, and the trend at the time, the trend price, I'm not showing it. It was about $1, right? That would be the trend price. I'll put it back on. Oops. Let's just do it to show all of it. So you can see the trend price was $1.62. And if you held that till the trend price today, you would have 126% return. So it's just interesting. You can see how obviously if you buy a little bit over the trend.
Matthew, I want to make an observation. This graph that you're making, for the people that are listening to us, it's the core of everything. Because if you have doubts about fitting lines, through the data, you can see clearly because the returns do not lie, right? You're showing to us that the returns are going down, and then you're showing through that black line, they are going down exactly like the power law predicts. So it goes much beyond just fitting a line. It's a much deeper way of looking at the power law. The power law is this thing, is the fact that the returns are going down and are going down in a very precise fashion. That is a beautiful graph.
Thank you. And then before you go out until the end of, we project out, but look, we got a blank space here on today, right? So I think, Sina, you said your law was at 74, or your power trend. Mine's at 78, just with my data is what it is, right? But mine goes up at about $80 a day. Okay, so 78K, 192 tomorrow, 78K, 272. It's about $80 a day. This percentage that you see here, 44.8% for people that just don't understand the compound growth. It's like, how did you just make 44.8%? No, that's the annual return. If your investment went up $80 a day, that's 44.8% compounded. So it's a very, as Gio just said, it's a very beautiful thing to see. First of all, because there's huge numbers, right? And you can look back again, like if you're Roger Ver buying at $1, or if you were buying in the crypto winter at $200, or wherever you were buying, obviously you can be below or above, not the power trend, but the return trend that I have here. And then you can also project it out. Now, of course, again, we are 20K under the actual trend, which my trend, as I said, just now was 78K. But we can project it out, and we see that this nice return this is just on the trend line, right? Take away the noise. You go from 44.9% today, right? That's the trend line compound growth. 44.9% per year. We go out to the end of the decade, 36.5%. And obviously you guys will have a little bit different numbers on your charts, but that's the big picture of where the trend line projects. And that's still a huge number. That's a gigantic
I calculated that it will take 40 years before we go down to SP 500 or something. It's typical gains of SP 500. It will take 40 years. So we have about 40 years of exceptional gains,
Right,
it's crazy.
Right. So it's the opposite of a stock or a bond, as far as they tell you 7%, maybe 9% with dividends. I just did a little short on YouTube today. The 100-year growth of the Fed's balance sheet is 7%. Of course, if you looked in the last few years, it'd be over 10%. But that's the Federal Reserve's balance sheet. You want to make sure you're growing your portfolio faster than the Federal Reserve. So here we are. Yeah, the curve is not showing the 100%, but look at here. You can still make 100%, buying Bitcoin on these dips as we had, right? When we went down to 16, 15K. And then, of course, it's more volatile here. This is really, I stopped it 1 month before, right? This is just volatile noise. Don't, I've never financial advice, as I always say, but, of course, we're a little bit below the peak we had a couple months ago. But you can see how the returns move around the trend line curve.
Matthew, Matthew, thanks a lot. I think these graphs are great. And just to reiterate Giovanni's point, 44% is a monster number, right? A lot of people are like, well, 44% is not enough. I'm too poor. Get real, guys. We're talking a huge number. Let's move over to money or debt. I don't know if you have anything prepared or just want to comment, but Stephen Paranoid, money or debt, you're on.
Let me just say the 44% is much better than most of Warren Buffett's career. So
yes, absolutely.
You're on mute.
I'm not on mute. He muted me.
Oh, okay.
Had a little bit of background noise. I muted you, so go ahead,
Yeah.
Stephen.
Sorry, I have a fan on. I'm going to turn it off. Okay. I want to share screen. Can you see that?
Oh yeah, no. Yes. Hold on. There you go.
All right. That's not good. Okay. So this is just to reinforce the point in a very gross way about declining returns. And all I've done here is I've taken for each of the 4 epochs that we've completed up until the 4th halving in April 20th, April 19, April 20th of earlier this year, I've taken the average monthly return by epoch. And the average return is the orange line here. So in the first epoch, and I only used data for the 3 years, not the very first year, since we didn't have good price discovery. We had a 30% average monthly return. By the second epoch, it dropped to 15%. By the third epoch, it dropped to 10% per month. So these are fantastic returns, 10% per month. And then by the 4th epoch, it dropped to 7%. So this is model free. This has nothing to do with the power law, except that if you were having exponential returns, the orange line would be straight. And then the blue line is the standard deviation by epoch. And that's just the standard deviation of the monthly returns. And it drops from 80% down to 50%, down to a little over 30%, down to 25%. And you can project these out, and I can actually fit these by using the power law if I add a diffusion term. And it's somewhat empirical, but I think the idea is that these bubbles that we get, the exponential rise and fall of these bubbles, some of that diffuses into the total return. And so you can get an empirical parameter on the diffusion term, and you can fit these quite nicely. The next thing I wanted to show is people often ask, well, what about inflation? Should you correct for inflation? And there are different ways to look at that. You can look at the CPI, or you can look at what the Fed uses, which is the PCE deflator. A lot of people don't believe the inflation numbers, but you can look at M2, the growth of M2, or other, money metrics. We know just as the Federal Reserve core reserve balance grows at 7% over long periods of time, M2 also grows at around 7% over long periods of time. So it essentially doubles every decade. So how do you correct for that? Well, you can fold that into your model, but one way is just to say, all right, we'll compare to gold. That's supposedly, some sort of a truer value of taking out long-term inflation. And what we find is the same kind of power law fit, a slightly lower index. So the power law is about 5.5 index. And the R squared is a little bit lower because gold is noisy, I guess. I'm not quite sure why, but probably because, gold has its own reasonable volatility there. I think there's I don't think I want to, well, the Kelly criteria, I'll just show those briefly. This is, if you use the Kelly criteria for the, really the optimal amount that you want to hold to grow your log wealth. And there are two different formulas. So this is the gambler's formula, which is actually more conservative than the investment formula, because with the gambler's formula, you're actually modeling the possibility of complete ruin, which we expect we're not going to have. But this is a more conservative take. And what you do is you look at how often you win, and you can do it on a monthly basis or a quarterly basis or a yearly basis, etc. And the time window you choose is very important. So if I'm going to rebalance my portfolio, if I'm going to pick a time window, then I need to calculate the optimal portfolio allocation for that particular window, and assuming I'm rebalancing at each boundary. And so we've got in these four columns, the monthly, the quarterly, the yearly, and there are two columns for yearly, which I'll explain in a moment. And the P and the Q are the win rates, where Bitcoin wins, for that month or that quarter relative to just straight cash. And if you want to do it, you can do it against T-bills, but this is just straight cash in these cases. And then you look at what's the average win size. So Bitcoin gives you much bigger wins on the win side than losses, because we know it's got this skew to it. And you work through all that, and what you find that if you're rebalancing monthly, it would be optimal to hold 24%, and you actually wouldn't want to go above that. If it's quarterly, you'd want to hold 35%. But if you're more of a hodler, saver mentality, long-term investment mentality, then if you take all the yearly returns since 2011, you would want to have a fraction of 77% invested in Bitcoin. Now, you may say those early returns were extraordinary. And of course, I just showed you data that says we're not unlikely to repeat on average what we saw in the first two epochs. But even if you just take the last 6 years, you still would have an allocation that's above 50%. So I think I'll stop with that.
Yeah, Stephen, this is a great thing, and this Kelly criterion is one of the least understood things, I would say, in financial theory in general. But certainly among Bitcoiners, I don't think they understand this Kelly criterion at all. And so I'm really, and I have to say, it shocked me a little bit that it was so low, right? It shocked me that it was like you're coming out and saying 50%, because I would have for sure guessed that it would be like 90%. That's what I would have said. That you should, or maybe even over 100%, right? You should leverage up.
If you use the investment formula, which takes the mean return minus the risk-free return, which would be the T-bill rate, and divide it by volatility, by the standard deviation, you get close to 100%.
Okay.
And does it?
Yeah. Sorry. Go ahead, Matthew.
Just does it take it? So does it only consider one investment period, and then you had to do the rebalancing as an add-on yourself, or does the formula optimize the rebalanced portfolio over time?
Yeah, you have to rebalance at every window that you choose. So if you choose annual, you're going to rebalance once a year. If you choose quarterly, you're going to rebalance 4 times a year at each boundary.
I think what it's saying is that there really is this optionality, right, of these kind of bubbles, right? And it's sort of saying, you really kind of should trade the bubbles a little bit.
Yeah.
You know what I mean? You kind of.
I say all the time. I mean, it's obvious from a rational point of view. If a bubbles repeat, it's the only rational thing to do. Okay, that is the only big question mark. Are these bubbles are going to repeat? Because let's say, just in an imaginary case where we know 100% that the bubble is going to repeat, it would be stupid not to sell some Bitcoin at the top and rebuy at the bottom, right? It would be an illogical thing to do. Now, for some people, it's easier, and you don't have to worry about, you don't have to use your emotions, and that has a price. Some people are okay with that. But, from a logical point of view, of course it makes sense to rebalance it, of course. And the only big question mark, are these bubbles going to repeat? But you can see, the beauty of a power law. It gives us, is I say now that we have this tool, is like driving with the lights on. We have the lights on, so it's still dark around, but at least you know a little bit what is going on in front of you, so you can make some informed decisions. So that is the value and the power of having this tool available to us. That is what I feel.
Great. Let's move on to Sminston, and I don't know if you have any charts, Sminston, or
Yeah, I don't have slides, but I was happy to share. I have some tabs open for my Twitter. Maybe
yeah,
that,
perfect.
if that
Why don't you
works.
do that? Why don't you share those?
I'll just go ahead and share my window. Yeah.
So Sminston also, it's interesting to me that a lot of people here come from different kind of backgrounds, right? So we have two astrophysicists, and Sminston, you're like a material science guy, I think. Is that correct? Or
I work on so my PhD was in material science and engineering, and I've been in battery, specifically lithium-ion battery development for most of the last 10 years. So that's been my space. Definitely not astrophysics or rocket science stuff, but that's been my passion, and this became another passion of mine around the beginning of this last cycle, I guess, 2020, 2021. So really started doing the analytics around this just starting this year. So, yep, that's my background.
Okay, cool. So why don't you explain what this decay channel oscillator is?
Yeah, totally. So this is something that I have been making a goal to update at least a couple times a week at this point. I think I'm coming up with maybe slightly better ways to do that over time, but I don't think. Oh, switch the sound off of that. This is basically just an animation. It's probably easier to look at just the still version of this so I can explain it. But this is all of Bitcoin's price history transformed to be normalized between the upper and lower bounds of what I'm calling the decay channel, the Bitcoin decay channel. And so I'm going to switch over to this plot here, which is just the overview of that in log space, which many of the listeners are probably familiar with by now. The line you can't unsee, many of us have shown the trend line going straight through the data. What this is showing, and Giovanni touched on it earlier, is the support, what we're calling, or maybe the support line, which is just I'm using the 5th percentile of the data. It's a quantile regression of the power law. So it's basically taking the lower 5% of the data and fitting that power law to that. There are a few different ways. There are a handful of different ways to generate this, but this is, and actually kind of another project I'm working on right now is trying to come up with more of a statistical basis for how to set that. But right now I'm going with, that's the 5th percentile is the lower bound. And I'm really interested, what I've been really interested for like the past month or so is the curious exponential decay of the bubble tops here, which I know some of the other analysts here have been looking at through different lenses. My approach here is I'm actually taking the absolute residual, so the deviation from the support line, the data point that exists at the very top for each of these cycles, and I'm fitting each of those, and you can see that it sort of forms this in log space. It sort of decays, but it trends towards the support line in the future, and we can kind of get into that. But this is the basics of what the decay channel is, and all this oscillator is doing here, Fred, is the 100% line here is always defined as the upper bound of this decay channel. And the lower bound, 0% here, is the support line defined by that 5th percentile quantile regression. That's all it's doing. So it's not overly complicated. The reason I'm tracking this, and I think it's so interesting, and some others have also pointed out, is the absolute tops of these bubbles have so far, for at least for 4 cycles, shown amazing consistency and accuracy when fitting that exponential decay model. So for example, when you look at these peaks in the oscillator, the 2013, 2017 peaks go to 102.7. So I'm actually letting it float above 100% a little bit. And then you've got like 94 95.5%, I think, for 2013. And then just like 99.8% for the 2021 peak. And so it's something I'm tracking, and I think a lot of us are curious to see what this cycle holds for us, how this cycle holds up in terms of what the absolute price peak is going to be. But this is kind of what I'm using this as a guide and something I'm just tracking and trying to develop a little bit better.
So you're looking at this number. Essentially we get this number, which is sort of around 20% right now.
Yeah, that's right. Yep.
Yeah. So if it goes to 40%, what does that tell you? Like the number goes from 20% to 40%. What does that intuitively tell you? What does that mean? What does that mean to you if it goes to 40%?
The specific number I'd have to do it's an easy calculation. I'm going to try to do math live, but it's what it would do is if you jump back to this channel here, it would take you if I just zoom in. Can I do that? That's going to have trouble with that. It's taking you essentially closer. It's taking you to 40% of the difference between this upper bound and the lower bound. So the lower bound today,
50% is sort of
here's another way to sort of describe it. But unfortunately, here I'm just looking at the year 2025 because I think a lot of folks are kind of interested of where this is going to go. And I'm not one of the analysts here trying to be as precise in predicting the timing of this. I think Gio and maybe some others are really honing in on that more and probably doing better work on that. I'm kind of a little more agnostic as to the timing. I'm expecting a cycle to bring us to the top, to the moon, sometime between now and end of next year. And so I kind of just got the quarterly upper bound estimates of what it could be if it continues to follow this exponential decay trend on the top. So this is kind of January 1st, April 1st, July 1st, all the way to the end of the year. And so that's the white numbers here. So it's looking like, if it's middle of the year, smack in the middle of next year, it's going to be about 216,000, it looks like. If it gets delayed before we reach the very top of this channel, it's looking closer to 240,000. And then these are all the values of the quantile regression support values.
So let's circulate this as a group. Next year, we had seen a show that the quantile numbers around 200,000, right, is a sort of our top. You're coming out with 230,000 as a sort of.
Well, actually, I think his top is like 280,000, if I remember right. If you're looking at the
1% number, yeah, is 1%
for the 1% number, right?
Yep, his 1%. So, but you're sort of saying you do expect kind of to go into that absolute peak at least for 1% of the day, right? So there will be. So I think what we're trying to, just trying to pull this all together for people. We might have a peak. The numbers suggest we might have a peak, up to close to 300,000 next year, but it's going to be short-lived. It's not going to have a lot of data up there, right? It might just be a couple days that we hit 300,000 on average. We know that the current price is pretty cheap. From all the metrics that we're looking at, it's pretty cheap, and we do think that a doubling of this price in the next year seems statistically likely. Is that fair to say?
Yeah, and I think that's very fair to say. I mean, I look at this as if we've been kind of this descending crab crawl for a lot of this year, and it's frankly getting a lot of very boring for a lot of us. For long-term hodlers and analysts like myself, this helps give me confidence that I still have time here to accumulate because I'm expecting this 20% to get darn near close to this 100%, which will hopefully align to one of those different prices that I was covering in next year. So
I want to make some comments, also to address some of the comments that I see from people in the chat, because maybe we want to address some of their comments or even questions. First of all, we are not doing TA. This is not TA. This is real math, and Bitcoin is very mathematical in almost everything it does. And actually, I want to remind to people that I have created this model more than 5 years ago, and they have been right. I even called the bottoms. I can show you some snapshots where I actually say, "Hey, we reached the bottom." I have done it several times. The tops are a little bit more complicated, but the latest work
Yes.
that we have done, including what we just saw with Smithson and so on, it's beautiful work because it shows that even the tops are regular. The fact that the tops are decaying, it's surprising because I don't know. It's a really shocked me as a scientist, because we are trying to analyze these as scientists. Like if we were anything else, like if we were looking at planet data or some other scientific data that as a professionals, we spend all our career working on 30 years. I have 30 years of experience looking at scientific data. So this is our approach is very unique. It's very different. It's not TA. It's not TA is drawing a line.
Agreed.
Joining two dots. Here we are really saying if everything repeats like before, and it seems that Bitcoin is very regular. Look at these peaks that you just saw. They are almost like clockwork. If things repeat like before, and there are maybe reasons why this happens, then this is what to expect. We see this decay, for example. The decay is measurable. It seems to be very reliable. And then you can say, given the decay that we observe, if that continues to happen, then this is what we are going to expect. With this, it's about, I calculate it's about 80% deviation from the trend. And that, so if you calculate what the power law gives you at a particular time, that is, we are expecting to see the top around the end of 2025. You can go check what the value from, in that case, I did something slightly different from Smithson. I use the general trend instead of using the support, but it's kind of the same idea. You can use the trend, the general trend, and say, hey, it looks like we will have a deviation of about 80%. So you calculate, you add 80% to the value for the power law. The value for the power law is about $115,000. You add 80% to that, you get close to $200,000. So this is what we are expecting. Now, is it possible that it goes to 250, 300? I would love to. I did some additional work. I don't know if you guys are interested. I can show you what the typical behavior during the bubble is, because even that.
Giovanni, let
me just maybe I can wrap up a couple of these points.
Yeah. So, go ahead, and then.
Yeah, thanks. I agree with everything Giovanni's saying there. By the way, I think and everybody go check out his work on the bubbles, and I guess this is something. This is also a bit of a project. I was trying to see how easily we could predict the peak of 2021 using only the exponential decay of the first three peaks using deviation from the power law support. Amazing first results. One thing that actually APSK helped work with me on is that this is kind of a pseudo out of sample prediction, right? The one mistake I made in this is that I used the full data set for the support line, whereas I was only using the data up to 2017 for the peaks. So I'm in the process now. I'm going to probably put this out in the next week, within the next week, is kind of looking at the prediction using the power law support as fit only up to dates between 2017 and 2021, which is actually pretty interesting. And the error is very low. It's not quite this tight, but it's looking like it's still within a couple, $2,000 or $3,000. But here, just from this little study here, again, that's the big caveat, but it's within $1,000. It's within 1%. If you assume that you already know the full, the actual power law support line based on all the data. So that's pretty interesting, and this is going to continue to get more interesting, I think. The last other thing I wanted to mention was something on the Quantile regression stuff, which Sina is now going to be updating us a lot more on. And this was actually from, I believe, my first post ever back in June. But I saw that Plan C had like a channel formed. If you remember one of his posts from a couple months ago, he had an upper bound. I think it was 99 point something, and then the third percentile. He's kind of showing. I think his post said the only channel that matters or something like that. It was a really cool post. So I had this idea to kind of like get a full range of percentiles. So this is obviously looking very similar to what Sina was just showing. And so this is what I call like a closing channel, a narrowing channel. So over time, this is basically taking a power law function and fitting all the different data percentiles in the data. And you end up getting this kind of closing channel, narrowing channel. So you do see some like, you know, diminishing returns. What I think is interesting that I want to see how this all plays out, but I've essentially seen 3 types of channels. There's something like this where maybe you use like the sigma plus or, plus 1 or 2, minus 1 or 2 standard deviations. And you can apply that across the entire data set for the deviations from the trend line. And you'll get something that looks like this. It's a completely, all the lines are totally parallel. And I think that this is valid, but I think it's a little less practical because you obviously see over time, you see the diminishing returns, even if the trend line still holds very strongly to the power law. So you see these peaks getting lower and lower and lower. The question to somebody using this might be, okay, well, where the heck do we think that the next peak is going to be if, like, you know, the 100th percentile is way up here now, or the, you know, +2 standard deviation is way up here. So this is the open channel. This is the narrowing channel, which is the same method that Sina was showing. It's all quantile regression. So it is showing diminishing returns. I guess the one quip I might have with it, but I'm curious to see how it plays out, is that it's still, I fear that it may still be potentially overestimating the absolute top of, say, 2025. I don't know that for sure, but if you look at like BitBo, for example, BitBo has like a narrowing channel here. And you can see that this purple line, it's a little hard to see, sorry, but the purple line here is predicting something that's pretty crazy high. And this isn't exactly what Sina was showing. I think they shifted the upper bound here slightly, like just an offset. But you will notice that the absolute tops of the bubbles, they don't fit a power law all that well. You can get a line through them. You can do the regression. So I'm curious to see what Sina turns up in terms of the fit parameters as we go from the bottom percentile all the way to the top percentile. I think that'd be a really cool analysis to see. I think Plan C has also discussed that to some extent. But
hey guys,
anyway,
I want to close this thing off. We'll do another one of these. I think this was a test. I just want to draw everybody's attention to. So I hope we got a lot of people here. So I hope you guys enjoyed it. We put together this Twitter channel called Bitcoin Brain Trust. It's Bitcoin Brain Trust BTC. And, you know, all the group and all the presentations here will be pushed in that thing. It already has 3,000 followers, and the 7 of us, and we'll add Matthew to this in the following. So you can see everybody's stuff. But that's it for today, guys. I hope you enjoyed it, and we'll talk soon, guys.